So right from my childhood, I've been seeing some orange color newspaper, Economic Times, and then the CNBC, the red ticks and the green tick. I got to understand that there's no single way to make money in the stock market. So I was meeting some investors who were diversified, some people who looked at charts, some people who just looked at fundamentals, some people who were very concentrated in portfolio approach, some people who were value investors, some people who were growth investors, and the common thing amongst all these people was
people in investing always think of chasing multibaggers. So does high growth investing help in selecting multibaggers?
absolutely for a stock to move from 100 to 1000, for example, it has to
How do as an investor or as a trader one should counter this?
see, nobody will come and tell us that study this stock, and there has to be a process. You cannot build your career on randomness, so the process has to be like.
Hello everyone, welcome back to a new show of You, Me and Finance. Today we have a very special guest who is not only an investor, he is a trader, he is a businessman, he is young and everybody is looking to be like him. He is specialist in selecting stocks and some people call him as the young bull. So welcome to the show Mr. Soumya Malani.
Thank you so much. Glad to be here.
Hello Soumya, welcome to the show
Thank you
and
so
thank you
much.
for being here at Pickright's office.
My pleasure.
Yeah. So Soumya, I have been listening a lot of news about you. I am reading a lot of things about you. So my team has connected with you. We wanted to know, okay, what is that which has make you think of getting into investing at a so young age, and you are not only an investor, you are into many more things.
Right.
Okay, before we get into the professional discussion, let's know a little bit about ourselves. So, Soumya, I'm meeting you for the first time. So, tell me a little bit about yourself. What is that you do, and how do you all started all your career?
Right. So basically, I come from a business family, right? And my grandfather used to invest in stocks. So right from my childhood, I've been seeing some orange color newspaper, Economic Times, and then the CNBC, the red ticks and the green ticks. So I was, that exposure was there, although I did not understand anything what it was. But then later, I used to ask my grandfather, what is it? What are you doing? And he used to just tell me one thing, that whatever you do, wherever you go, just read the labels. And that's how the concept of buy what you see, what Peter Lynch preaches, that came into the mind right from childhood, that whatever you are buying, whatever you are consuming, just read, just see that there is a company behind it who's producing it. And then the interest into stock market started coming, so I was nibbling here and there a little bit during my college days. And then I did my masters in finance, accounting and finance, from London School of Economics. When I came back, I wanted to understand the practical side of things, like how is it really done. So I used to, theoretical or the academic part of it, I had done a lot of research on. I studied also finance, but then I wanted to understand practically how things are happening and how people who have done it, who have reached a certain stage, what is the secret behind it. So what I did, I used to write long notes and I used to send it to investors in India whom I knew that they were very good. And then I used to request them that if I could just meet you, I want to learn with you. And more often than not, most of them did give a positive response. And so I used to immediately take a train or a flight and used to be in their city the next day or the 2 days later. And then I used to ask them thousands of questions as to how you do it. Suppose this is a new company, I tell you right now, open your laptop and show me how will you do it. And I met a lot of great investors in India. Now, why this was very important was that I got to understand that there's no single way to make money in the stock market. So I was meeting some investors who were diversified, some people who looked at charts, some people who just looked at fundamentals, some people who were very concentrated in portfolio approach, some people who were value investors, some people who were growth investors. And the common thing amongst all these people was they were very successful. So that opened my mind, that gave me a broader horizon, that the important thing is to find your own way. Just don't think that acha paisa aise hi banta hai. There are multiple ways. You have to go within rather than go outside.
Correct. So, if I may ask you, if you have any memories of your grandfather or any memories of his way of trading, or what is that he used to do, or what is the kind of research, or how difficult or it was to trade or invest in those days, if you have any memories.
So he was a lot into IPOs because at that point in time, the IPOs were the boom, and he used to fill the forms, and that is how things went. And he always used to tell me to look at the label of the products that we consume. Suppose you are going to a store and you are
Mhm.
buying something, just look which company manufactures
Right.
it, and
Yeah.
in case it is listed. So that was the only interaction that I had with my grandfather, because by the time I came into the market, he was no longer there, unfortunately. So but that was a very big lesson for me, because the first book that I read about markets was One Upon Wall Street by Peter Lynch, and I highly recommend everyone to read that. And in that book also, Peter Lynch has been one of the most successful mutual fund managers in US, and in that book also he has talked in details about buy what you see. So he
Correct.
talks about how when you are going to a, say, a grocery store or a mall, and then you come across a certain product and you might be using it, and how great it could be. I'll give you an example of that. So at one point in time, few years back, all of us had Pulse Candy in our pocket, right?
Mhm.
All of us were mad about Pulse Candy. Now, Pulse Candy manufacturer was not listed, but if you had seen the label, the packaging was done by Sampre Nutrition, I guess. Yeah, that was
Okay.
the company,
Probably I do not remember.
and that company Sampre went from 20 to 120
Oh.
during that period. So I definitely think it works. It's just about keeping your mind open to the opportunities that might be there.
So, when you met so many investors India wide, so if you look at investing as a product or trading as a product, so what is the biggest learning you have got from them? So, you met normal investors, or you met investors who are like fund managers or advisors? Like, what are the
Like
kind of
I
people you
met
have met?
people of coming from various backgrounds, like fund managers, individual investors, family offices, anyone I could come across, because that was my learning phase, right? Even now I'm very excited to meet anyone I come across, because there's something to learn from everyone. And sometimes it's not only about what to do, sometimes it's about what not to do. And I'm not saying that these people have done something which probably will make you lose money, but it's more about that thing might not match your temperament. Somebody might be doing option selling, but it doesn't match my temperament. So sometimes when you talk to people, you do understand that okay, this is not for me. That is also as important as knowing what is there for you, right? And as I told you, the most important learning that I got was that there is no single way. You have to look within, that what suits you, what is your mindset. Like I'll tell you about myself, that I love to buy stocks which are trading at 52-week high. Now, a person who's value investor would never be able to do that, correct? I want my stock. So any stock which is at 52-week low, it will not be on my radar. You ask me, I'll not know anything about it. So my entire process is built on a stock hitting 52-week high, and then scanning them over the weekend, then looking at the common sectors which are there from it, or the common theme, and then understanding why that theme is working, and then going into picking probably the stock which could be the best out of those stocks, right? So that is how my screening process runs. So
Correct.
yeah,
So every individual has their own approach of
absolutely, yeah,
selecting stocks, and this is also a very good way of selecting stocks. If you are a person who wants to invest into stocks which are very high growth in nature,
absolutely.
so now when you talk about high growth investing, so people in investing always think of changing multibaggers. So does high growth investing help in selecting multibaggers?
Absolutely. I mean, you talk about any multibagger. Tell me one common trait in any multibagger, any stock. That is, it has to hit a new high, right? For a stock to move from 100 to 1000, for
Okay.
example, it has to first hit a new high, right? a lot of times when I talk about 52-week high, people think that okay, he's probably talking about uh, he's maybe stock is there at the top or something like that, but
Yeah,
that's not the
every
case.
point in time I have seen that investor will say, I'll not invest now because
Yeah,
market is at a peak.
yeah,
I'll not invest into this stock because this has just freshly made a 52 weeks high. That is when I see that people are reserved. And
right.
when I say that there is a company which is available at a discount of 20-30%, I should put more money into it. If there is a problem in the stock and stock has fallen, they feel that it is an attractive price to
Right.
entry. So how do, as an investor or as a trader, one should counter this?
See, nobody will come and tell us that, study this stock. And there has to be a process. You cannot build your career on randomness, right? So, the process has to be like if you are listening to XYZ people and then they are telling you which stock to buy, right? Or you are listening to news channel, it will probably be too late. My point is when the stock hits a new 52-week high for the first time, and when there's a common sector behind it. I'll just give you an example. So even in this bull run, if you look at a stock called Zentech, right?
Okay.
Market made a bottom in on I think 28th or 29th of March 2023, but Zentech made a new high in February, I think 14th or 15th February 2023, which was before market. So this stock is giving you a hint that I might be a leader. I'm not saying it will definitely be a leader because there's no definitive things in the market, right?
Yes.
It's all about probability. So this stock is telling you that, study me, look at me. Even in bad markets, I'm hitting new highs. Means there is some kind of a strength there. And
Correct.
then if you would have read that, you probably, if you would have read the annual report, you would have understood what is happening in Zentech. You probably would have caught the defense theme as well because of understanding what has happened. So I believe, like when we come into the markets, right, we want to buy the next Asian Paints, the next Pidilite, the next Aisha Motors, or the next ITC or whatever, right? And if you look at charts of these companies, they have always made new highs while going
Correct.
up, right? Time and again, they keep on making new highs. But when we come into the market and we start practicing it, what we do the opposite. We want to buy stock which have fallen. So then our goal is to find multi-baggers, but we are going the wrong way.
Correct. But I have
Just a
seen,
disclaimer,
yeah.
sorry to interrupt. I am not saying this is the only way to make money in the market. There are thousand other ways and everything works. According to my mindset and according to what I do, it suits me the best.
Great. So, ma'am, what is the challenge here is if I keep on buying stocks at 52 weeks high, so what is the time I should feel that now the stock is making 52 weeks high, but I should still consider exiting it? For example,
Yeah.
let's say we take example of ABFRL, we take example of IEX, which has
Right.
made recent highs, then they have fallen. Wherein companies like Birla Soft, they have made a high, they have
Correct.
beaten down, and again they have come back to a new high. So how do as an investor I'll decide or I'll come to know that
Exits.
this is the high that I should exit?
So basically, I mean, there have to be certain rules behind it, right? If you're doing a strategy, one thing that I strongly recommend is to do deep dive or go into the depth of the strategy. Now, when I started doing 52-week highs, what I've done is right from 2008 9 till now, every week, whichever stocks have hit 52-week high, I've back tested it. Now, while back testing, I've tried to understand what are the common fundamental reasons for it as well. It's not that stock hits 52-week high and you buy because 500 thousands of stocks will be hitting 52-week high in a bull market, right? Every week. So you are not just randomly going there and buying it. There are certain nuances into it as well, and there is a fundamental angle to it as well. Now, on the exit, first thing that a lot of people ask me that, how do you exit stock? So first thing that I tell them is that for any kind of exit, whether you're a swing trader, a positional trader, an investor, whatever, first clarity that you need to have is why you have bought that stock. Until unless you have crystal clear clarity as to why I have bought a particular stock, you will not be able to exit it efficiently. Now, for a swing trader, a multi-bagger does not matter. For him, he's happy with a 20-25%. For a positional trader, maybe he's happy with a 40 to 50%. And for an investor, maybe he's looking at a multi-bagger return. Now, the exits of all of these people will be according to whatever their strategy is, right?
Okay.
Now, if you are doing a 52-week high kind of a strategy and you don't know how to exit, one simple thing that I'll tell people is that just use a moving average. At least have something rather than having nothing, right? And then there are one problem that investing world has is that there are thousands of books on when to buy, but there are very few, or I don't even know if there are on when to sell. Very few of them, especially in investing world. So you have to go back. You have to sit. You have to see that all these multi-baggers, when their move ended, how were they reacting? Like, is there any moving average that got broken, or is the angle changed? Has the angle changed? Because in stock market, a lot of times, the angle in which the stock rises is the angle in which the stock falls, and a lot of multi-baggers, like 50% of the 80% of the stocks after a bull market fall by more than 50%, like the multi-baggers, right?
Yeah.
So you need to understand that how to exit them. So an angle change is one thing that I use. If a stock goes into 90-degree angle and you feel that it has already become a huge multi-bagger, that is one sign that you should tighten your stop losses. I'm not saying just go and sell, because the last move, the bubble move, gives you very fast, easy money. uh, Another thing is, it also depends whether the stock is highly liquid or highly illiquid, or because if it is
Yeah,
highly liquid,
liquidity is a
yeah,
concern which is very
right,
very underplayed within Indian
absolutely.
investors.
You can
This
trail. If it is liquid, you can trail, but if it is illiquid, then you have to sell on rise. You have to sell in the strength, because otherwise you'll not be able to sell it. So a lot of things are there. Probably we can spend the entire day talking about selling, but I've just given few clues and people can work around it.
so may one more thing. Well, you will be investing. See, we have a product which is called Invest Bank, wherein it focuses on rebalancing. Rebalancing in the sense there will be an advisor who will be analyzing many factors, and at some point in time it will be changing that exit a particular stock or increase the weight or
Right,
decrease the weight.
right,
So objective of this is risk management.
correct.
So you as a growth investor, how do you manage your risk?
So first thing is, it depends a lot on your temperament, right? A growth investor can be highly diversified also, and another growth investor can be highly concentrated as well. So we need to understand that what our mindset is, what suits us the best. The other person might be making a lot of money by being concentrated, but you might panic. So first thing is that. So you have to find the right mix of being concentrated and diversified to control risk. The other thing is that there are four parts to a strategy, right? What to buy, when to buy, how much to buy, and when to sell. So until unless you work very hard and you do a deep dive on whatever you strategy you're following, you will not have answers to all four of these, right? And we need to find answers to all four of these. Once you have answers to all four of these for your own strategy, the risk management part becomes automatic, right? If you are following it. If you're breaking the rules, then there's nothing that anyone can do. But if you're following your strategy, then risk management becomes part of the process. And also, I think one of the major thing in risk management is understanding uh, how your strategy works in a particular kind of market environment. And is it a market environment where you have to be very aggressive, or is it a market environment where you have to be a little defensive, and you can develop your tools around it? I mean, there will never be a absolute black or white, but then probabilistically wise, you can definitely maneuver around it.
Fine. So, Soumya, you being an entrepreneur, you being an investor, you being a trader, how do you manage your routine? Because most of the time people are working, they are busy in some other thing. So,
Right.
how do they should plan their day that they can be a efficient trader or an efficient investor, or should they only rely on an advisor and leave it to them instead of like they select investing into a mutual fund or select to a PMS or subscribe to an investment advisor and leave, or they should plan their way, or how do you manage your
Uh,
this thing day?
Firstly, I think that if you are not willing to give the number of hours that is required, market is too fast now, right? So you should go via mutual funds or via advisor or PMS only. But if you are really passionate about the subject and you love the subject, for me, stock market is fun, right? I really enjoy parties, but if you give me a choice between market and party, I enjoy market more, right? So it's not work for me. and I'm blessed to be in such a profession which I actually love. Now, one thing that I really focus on is that I have daily, weekly, and monthly routine. So, for example, every day I have to do these 15 things as a part of my homework. I call it homework. Weekly I have to do these, say, 10, 12 things, and on a monthly basis additional these four things, right? So for me, what is important is, am I ticking those boxes? It is not important. Definitely returns do matter, but more than returns, I have to go micro and I have to make sure that I'm ticking those boxes consistently. If I'm ticking those boxes consistently, it makes me happy, and it gives me a lot of confidence also. I'll give you one example. During COVID, okay, I had COVID, and I will not say it was very severe, but it was little severe. And at that point also, I used to finish my routines. I used to take rest for an hour, work for 15 minutes, rest for an hour, work for 15 minutes. I don't fear losing money. I fear losing discipline. If I lose my discipline, आज ये reason है, कल वो reason होगा, परसों I'll get another reason to break my rule. So I fear losing that, because money making is a process. अगर आप अपने routines follow कर रहे हो, invariably money to you is given by markets. You cannot say that अच्छा इस month में इतना return बनाऊंगा या इस साल. It depends on how market is, what kind of situation we are in, what kind of environment we are in. Are we in a bull market, bear market? But what you can control is the routines. If I'm doing my routines consistently, I'm sure that I'll be okay.
So it is all about discipline as per Soumya.
Absolutely, I feel. Yeah.
The next thing I wanted to know, you being young, you have invested into some of the startups, you have different entrepreneurs skill. So I wanted to know कि as a beginner or as a investor, shall I look for investing into all these new year's companies? Like you have Zomato, you have Policy Bazaar, you have Paytm. Some of them are making 52 weeks high, some of them are making 52 weeks low. And herein the data available is very low.
Yeah.
So, as an investor, shall I venture into it, or shall I stay out of it, or I will have some mix into it? So, how do you think of this as a segment?
So I feel that it's not important for all of us to, be playing all the games, right? You have to pick and choose your battles. So, and your sectors for that matter. So, for example, I don't understand pharma companies that well, right? So I do invest in pharma companies, but it's more on a broader level.
Okay.
So it's not important that I invest in a pharma company. There are other companies too to invest. The problem comes when a employee of HDFC Bank is investing in SBI. So SBI ठीक है अभी चल गया वो बात अलग है, but from last so many years you are seeing that it is very efficient. You are in HDFC Bank, you are seeing what kind of efficiency it is showing, and an SBI where the lunch break never gets over. So then that is where most of the people make mistake.
Correct.
That is what I feel. I'm not recommending HDFC Bank, nor I'm saying SBI is not worthy of an investment, but I'm just sharing a thought process.
Correct.
Because if you look at last 20 years, the kind of money that HDFC Bank has given is not something that SBI has given. I'm not talking about last 1 year, right? So I feel it's not important to invest in a Zomato only, or a car trade or any other company. You may or may not invest depending on how well you understand those companies, the variables that go into those companies, like what are the things that when done well help those company to grow better, what are the things if they happen will push the company back. If you understand, you have an understanding, you go for it. If you don't have an understanding and you want to still buy, you work hard to understand it and then you invest.
Okay. So, Soumya, tell me something. So, let's say I am a beginner now and
Right.
I want to build a portfolio. So, while building the portfolio, shall I consider, or what are the things that I should consider?
So the first thing is, like I said, that you need to work hard. It's not that इधर से सुन लिया उधर से सुन लिया पैसा बन गया. That will be luck and speculation. If you want to run it as a business, you have to work hard towards it as a business, right? The second thing is that I feel that don't be fixated कि ग्रोथ से ही पैसा बनता है, वैल्यू से ही बनता है, कॉन्सेंट्रेटेड रह के ही बनता है, डाइवर्सिफाइड होकर ही बनता है. कीप योर माइंड्स ओपन, and there are thousand ways to make money from the market. Choose one. The third thing is that deep dive. when you understand what kind of things work for you, deep dive into that, go into the history, study the history. A lot of people know this, but people don't put in the effort to really go in deep into their strategy. Like we discussed, that what to buy, when to buy, how much to buy, and when to sell. Find answers to these four questions and then stick to the discipline, right?
Correct.
And have routines every day. I mean, even if uh, a lot of people, newcomers, really like to know what big investors are buying and they look into bulk deals. No issues. You just follow one bulk deal as a process, but make sure that every day for 10 minutes after your office, after your work, you are giving 10 to 15 minutes, and every single day, no matter what, you are looking at that bulk deal. Make it a process
I think
and read a lot.
thank you, Soumya. Thank you for your time. Thank you for all your insight. If you are a person who is looking for investing into high growth stocks, then do watch out for this episode on entirety. If you are a person who is looking for investment discipline, who is looking for investing into new age companies, then this podcast is for you. Thank you for watching. We'll see you in the next episode.